Hey everyone, Dan from Heavy Metals here, and today we're looking at some pictures that I snapped because I think that they're very important to know. If you go on the usdebtclock.org, you're gonna find a lot of numbers on it, and they are freaking out. They're always changing, right? But if you go towards the right side of the debt clock and you look at where it says dollar to silver, dollar to gold, etc., you're going to see a few different things. And your first thing to look at here is dollar to silver ratio. All right. And what they're saying here on the debt clock is that per ounce in today's money, silver is worth $1,476 per ounce, okay? And they compare it to 1913, where it shows that silver was $2.70 per ounce, right? Gold, very similar situation in terms of today's money. Today's money, gold is worth $11,659 compared to 1913, where it was worth $27 per ounce. Now, if we go to, this is even more interesting right here, the paper to silver ratio and the paper to gold ratio. Okay, paper means ETFs, futures contracts, and whatever else in terms of digital things that people own, like stocks, whatever. Digital, and there are some stocks that they're not backed by physical supply, but that there are some that are. And if you choose to take delivery, the company's required to give you your silver or your gold or whatever. And there's also platinum and palladium ETFs, etc. Paper to silver ratio. This is the most mind-blowing part. For every ounce of silver, people have 396 contracts. So if 396 people decide to take delivery on their silver, there is 1 ounce that they all have to split, basically, right? And so there are millions upon millions of paper contracts being traded, and some people hold them, and some companies use futures contracts to try and get better prices on things. For example, like oil, airlines use it, cruise lines use it. They use it to get better deals on oil for their planes and their ships. So gold, same thing, similar situation. There's 148 contracts right now. This is as of today for the debt clock. According to the debt clock, there's 148 paper contracts of ETFs, futures, whatever, to 1 ounce of physical gold. Now, like I said, let's just wrap this up into perspective. There are millions of contracts out there that people own and trade. And I'm going to say it's even more for silver, just based on this little snapshot here. But there's not enough gold and silver to go around. If people cashed in, there would be a problem. The COMEX would have a problem. There would be a problem. Okay, let's not forget that it was a year or two ago that London needed silver, so New York had to fly physical silver over to London so they can meet their physical deliveries. We're not done with that. This is just the beginning.